Hey everyone, welcome to our weekly tax video update where we're tracking tax legislation with the Trump tax cuts that are expected to come back into play. I've got Nate Sosa here. He is the tax manager that's leading up our national tax office here at Hall CPA. We are a CPA firm for real estate investors and high net worth individuals, and all of our clients are very interested to know what's happening with tax legislation. There's a couple big things that have been talked about, such as 100% bonus depreciation, which directly impact anybody investing in rental real estate. So I've got Nate here, and the first question, Nate, for you that I want to ask is, tell us what's going through Congress right now.
Great question. Yeah, thanks for having me on today, Brandon. Yeah, so right now we're like just this week we just heard about the budget resolution getting passed, right? And I think there's a little bit of confusion on what that means. There's been actually a lot of social media talk about saying, "Oh, great, no tax on tips, no tax on Social Security, no tax on overtime." That the Trump administration is getting through what they promised. And actually, sure, that's provisions that are going to be talked about upcoming, and it's going to wind up being discussed. But for now, those are we have a skeleton, right? The Ways and Means Committee is the one who is the people who assign, write all the tax provisions ultimately, and then it gets passed through Congress. Right now, we just have a skeleton. We have a framework that they can play within. We don't actually have anything that's been passed. So while this budget is a good step in the right direction, things are only going to get harder for them because right now, the Senate and the House, at least previously, didn't see eye to eye. The Senate had passed their own budget, but didn't include anything from a tax perspective, while the House passed their budget, but it does include tax resolution. Now, so we'll have to see how that plays out. More recently, we've seen actually the House and Senate come together on some agreements on tax. However, that would require the Senate to pass a new budget that would actually align with the House's, not the other way around. So right now, they're kind of they were battling with each other. More recently, they've been kind of coming together a little bit more.
So explain how this works, though, this budget resolution works, because I've seen on social media kind of two camps of people and even professionals. Some saying, oh, 100% bonus depreciation and the R&D tax credit and the SALT cap limits and all this stuff, this is included in the House bill. And then I've seen the other side saying, no, none of that's included technically, it's just funding. So explain how this works.
Yeah, so essentially how this works is that basically the House and the Senate at the same time generally, they introduce what's called a House budget. And so then it's a bill, it gets a number, then it goes to a committee. And then this is where the fund government piece runs in, because now, oh great, a subcommittee happens, and you have hearings, and the subcommittee has hearings, right? All this stuff happens, then they do a subcommittee markup of the bill, right, of the budget resolution. And then the full committee does the markup of the markup, right? And so it's like so much government regulation and all that comes into play. And then the rules go to committee. After it goes through the final committee, which I feel like I've mentioned 3 committees at this point, then it goes to budget resolution. And the budget resolution, then it goes to the floor. And then they vote. Are we going to kill this? Are we going to make this survive, right? We found out on Tuesday that the House, they could only lose 1 Republican vote. They lost that 1 Republican vote, and they still wound up getting passed. It was a little bit, like some people call it, survivor, right? They actually were having in the middle of the vote. They canceled the vote in the middle of the vote, and then they had, I'm pretty sure one of the House representatives is like a month after having her first kid or something like that. They flew her in, and she came in. It was a super important vote. They were able to flip 2 of the people who said they were outright no's 2 days earlier, and they were able to get this passed, right? So that's kind of how that works there. But now the bill's passed, now they have a framework to work with, right? Just yesterday, the Ways and Means Committee was working on doing a tax write-up, which basically is like planning out how they're going to have these provisions work. Right now, when you do budget resolution, it has to work over a 10-year period, right? At most. The most, you can't go beyond 10 years, and that's because of what we call scoring. Basically, how much funding is going to be needed from the government? How much are you cutting in certain areas, right? This, for us, taxes, right? 100% bonus depreciation, R&D expensing, that's going to reduce the revenue the government will bring in. While in other camps, they're going, hey, we need more funding, we need more raising, or we're going to increase revenue from these other areas. And so that's why we get to score that over 10 years, because it has to wind up being neutral at the end of the day. We have to be neutral, and the reason that is because then in the Senate, they don't have to deal with the filibuster, and that way they can pass just by majority versus having to have 60 votes.
What does neutral mean in that context?
So neutral means that you have to essentially that they have to quote unquote pay for themselves, right? You have to, like, you're given a framework.
Balance the budget.
They have to balance the budget, right? Which, I mean, you talk to economists, they're going to say, yeah, it balances the budget, but it really doesn't at the end of the day. And there's technically two different ways that scoring works. The ways they work are, there's the conventional scoring, which is basically like, hey, this is how much tax revenue this will bring in, or this is the amount of economic spending that it will not bring in. And so there's also dynamic scoring, which is actually factoring in how much economic raising, right? That's where bonus depreciation is really favorable because it produces a ton of expensing and allows people to reinvest into the economy, be a little bit more looking to buy assets, real estate, etc. And actually, the economists say, hey, yeah, the only provision that could wind up paying for itself at the end of the day is 100% bonus depreciation. But so there's conventional and dynamic. Dynamic was actually scoring used. Normally you have to roll with conventional. Dynamic scoring was used to pass 2017 Tax Cuts and Jobs Act back in 2017. So wouldn't be shocked if they don't do that again. Right now, the biggest issue that the Senate and the House had was the Senate wants to make the the Trump tax cuts 100% permanent. Basically, not a 10-year gap, not a decade, not 8 to 10 years. They wanted to make them permanent for forever, basically. While the House does not allow for that. And so they're going to have to use what's called a current policy baseline, which basically means these cuts are free. It's a little bit intellectually dishonest, in my opinion, but that's the way they can make it get through.
I see. Now, when we're talking about the scoring, are they looking at GDP growth to balance out the tax cuts, or how does that work?
Yeah, so they actually don't factor that in, right? That's where the dynamic scoring is what factors in that GDP growth. Conventional does not. Conventional is just basically like, hey, here's the revenue brought in and here's the costs that are associated with it. The dynamic scoring would allow for that.
And I know there's been a lot of talk about tariffs, obviously. How do tariffs factor into balancing the budget here? Like, is the strategy to develop or to drive some tariff revenues so that we can get even more tax cuts? Is that kind of what's going on, or how is that working?
Tariffs and Doge are definitely like the hot topics on like how we can actually get there. I know President Donald Trump has said many times that he wants to just use tariffs to completely replace the income tax. It's not as easy as that sounds. It would be nice, but I don't think it's going to be very possible now. But it is going to be, tariffs are going to be used to try and help pay for these tax cuts at the end of the day.
Okay. So when will we have an idea of what's in the ultimate tax bill here? Like, what are we talking, weeks? Are we talking months? What does this look like?
Great question. I think we're going to start seeing drafts over the month of March. I think that's when we're going to start seeing drafts and actual provisions get laid out. Now, it's going to be a lot of battling in the House because there's so many budget deficit hawks, right? They're like, hey, we don't want to increase, like, our biggest expense in the country is now the interest on our debt. So there's a lot of people who that's very concerning and they want to deal with.
And is that pretty bipartisan, the budget deficit hawks, or is it like one-sided?
It's pretty much one-sided. Not a single Democrat voted for the budget resolution, so I don't expect them to cross the aisle or anything like that. But there's quite a few Republicans who are very much emphasized on the deficit hawking, so they're going to be the ones that need to be convinced. The Senate, on the other hand, does not have as many of those, and so they're not that concerned on that side. So that's where the issue, like, so the House, they have to give a lot more to the House than they will have to on the Senate.
Okay. So over the month of March, we're going to get some more information, it sounds like, as to what provisions are actually going to be included in this ultimate bill. Right now, it's just a shell. So if you see anything online like, 100% bonus depreciation is included, it's not yet. That was the purpose of me kind of driving towards that question. So that's good to know. Now, we see all the provisions come out. We see the going back and forth. When does this get put to a vote? Is there a timeline for that?
Good question. So they are currently working on the 2025, the current package is the 2025 budget reconciliation. So that would mean it's due September 30th of this year. So that means it would have to be voted and finalized on. And President Donald Trump actually supported that in a post yesterday saying that he wants to make sure that this is done by September 30th. And he still wants a one big beautiful bill that he's mentioned many a time, that he wants border immigration and defense all to be included with tax cuts. He does not want two separate bills. He said that a few times, and he's trying to push the Senate and the House to align with each other on that. And so that would mean we would have answers by September 30th of this year. We'll see what happens. The Senate doesn't prefer that option, but that would mean we get a lot more clarity before end of the year.
Is there any strategic reason why he wants one big beautiful bill?
I believe he thinks that there's a lot less negotiation that's going to come through if we can get it all done at once. It's not like it, I don't know if there's anything other than that. I think it's just basically we can get this done all in one package, and it creates for great headlines.
Okay, cool. So September 30th is the cutoff. March we'll get some more clarity. Any insight into like I know back when they passed the 2017 TCJA, wasn't 100% bonus depreciation retroactive, or was it just on the?
So oddly enough, 2017 got like a weird cutoff where it's like, hey, great, from like September 30th on, you get to use 100% bonus. If you're anything out of that, sorry. So maybe they do. Hopefully they don't do something like that in 2025, where it's like, hey, great, if you buy anything after like September 30th, then you qualify. So my assumption as of right now that 2025 is going to be 100% bonus depreciation. Sorry for those folks who bought in 2024, but that's my assumption as of right now.
Do you have any guesses on any provisions that were in the TCJA that they're just going to let expire?
I don't. As of right now, they're trying to ram everything through. The only thing that I could see potentially expiring, depending on costs, would be the salt cap limitation. That's the only thing. Now, granted, that is one of President Trump's promises is to raise the cap, but it is too tasty of a pay for that I find. I'm curious if they will allow for it, if they might completely eliminate or not touch the $10,000 salt cap. That would be the provision that I'd see.
Okay. Now, what do you mean by pay for? Like, if somebody's listening to this that is just kind of interested in tracking, but they don't know tax, what does that mean?
Sure. Yeah, a pay for would basically be that, like, since they have to work within this limited framework of how all these things are going to cost. Now, that doesn't matter if they use the policy baseline, is what you're going to hear a lot in the news. But essentially, it's finding a way, like, great, to give everyone more tax cuts, we have to find other areas in the code to essentially, quote unquote, raise taxes on.
All right, awesome, Nate. Appreciate your time, and everybody else listening, thanks so much. We do have a website that you can actually follow us. So Nate is doing a great job updating this website on a consistent basis, this landing page on a consistent basis. But that link is www.therealestatecpa.com/2025 tax changes. So therealestatecpa.com/2025 tax changes. So if you go there, enter your email, you can track anything that's coming out in a nice, like very well-written format that's like not actually having to dig through all the bills and try to, sift through all the headlines that are going to, I'm sure, get really crazy. But we're also going to do this once a week. So feel free to subscribe to the YouTube channel, follow us on social media. We'd love to have you back. Thanks so much.